Get a move on and focus in on some of the top 5 stocks as well to keep an eye out on in today's trading session. Without a doubt, TCS is on the radar on the back of numbers. Net profit expected higher by about 15.2%. The EBIT margin is expected to see a growth of about 160 basis points on a Q-on-Q basis. This time around as well, we'll be watching out for commentary on the buyback. The cross-currency revenue growth is seen at about 3.2%. The outlook on the growth in the digital services space as well as the demand trends across verticals will be closely monitored. Margin expansion is expected led by strong volume growth. Also, keep an eye out on Dixon Technologies. We heard it out from the management as the Ministry of Electronics and IT has approved 16 applications against the PLI scheme. They said that now their contribution from mobile phones will grow gradually from 40 to even 50% of their overall revenues, for which they will have to undertake a larger capex. 10 applications from the mobile manufacturers and 6 from the component makers is what has been provided under the scheme. Meantime, Reliance Industry is the 7th check coming in after Silver Lake, General Atlantic, Mubadala, GIC, TPG. You've got Abu Dhabi Investment Authority injecting about 5,515 crores into the retail division in exchange for a 1.2% stake. Bajaj Finance, as per their latest update, said that their AUM is up about 1.3% YOY. The capital adequacy ratio stands at 26.5% and the new loans booked are at about 3.6 million. They say they will continue to accelerate their COVID-19 provisioning in the September quarter. Bharat Forge, watch out for that one. CLSA maintains a buy with a target price at 580, saying that the end market recovery continues. The demand outlook for their domestic and export market is expected to improve. Defense optionality as well could be large and order wins are expected. Let's get a move on to some mid-cap strategies too from our chartists and what are they picking out today. Dr. Narayan, what's on your radar?
Well, I think some of the financials were back in action, and within that, Bandhan Bank has started improving even, before the Bank Nifty surge of yesterday. So it was around the 280-85 levels. Now it's worked its way up about 300-305, and it's staging now a breakout above the near-term confines of resistance, and that should enable Bandhan to continue higher towards about 320, buy with a stop 302.
Okay, and Kunal, what's on your radar from the mid-caps?
Well, it's about Unichem Labs. Again, very interesting chart on the daily time frame, forming a bullish flag pattern. The stock managing to break out above this flag pattern around this 270, 272 odd mark. End of almost 2-month consolidation for Unichem Labs. So that's a buy. Short-term targets could be kept at 285 and stop us at 265.
All right, that's top mid-cap ideas. Let's take a quick breather right here on the show. Come right back for more on the market.
COVID-19 is driving the growth of information technology. Benefit from its rise by investing in IT ETF. Nippon India ETF brings you Advantage IT. Okay, the good news is that Asia is not really taking heart from what happened on US equity markets overnight. Asia is actually largely seeing some spots of green, if you will. Korea, Hong Kong, Australia, the periphery markets, even Shanghai is just about marginally lower. And the SGX Nifty is indicating a flat start but with a positive bias. It's inched up now. It's holding about 0.2% or so. So maybe we could start off with consolidation and not correction, and that could perhaps be the good news, really. Tata Motors, that is one name which really sprung up in action yesterday. About an 8.25% solid move coming in. Hemang, we know the group's focus is on Tata Motors, getting it debt-free. The recent channel checks also seem to be indicating that Tata Motors has got a slew of new launches in their pipeline. The sales data as well seems to be now picking up. But this kind of a move on Tata Motors at 8% rise yesterday, I understand that it's a high beta name, but would you say that it merits a look by investors as well, long haul ones?
Absolutely, Ayesha. I think Tata Motors, there are two things to watch out for. One is that across the markets, be it China, Europe, US, and other emerging markets, you're seeing that the JLR numbers continue to look much positive versus market expectations. And this coupled with the deleveraging exercise which the management has undertaken could provide a much better outlook in terms of growth for Tata Motors. And the domestic side also, we are seeing that the passenger vehicles and CV, you might see some gradual recovery. So I think the margin-led improvement, deleveraging and revival across the markets could provide some sort of attention to the Tata Motor, which has been a laggard for almost now 3 years. So we are turning extremely positive on Tata Motors at current price point, though it's a high beta names and there are many moving parts. But somebody who is looking to invest in a high beta company, this can provide a 40 to 50% kind of an upside from current levels.